Yeah, we've been discussing do airline and maybe even hotel rooms inflate prices if you look at them regularly. Well, I'll pick one Middle Eastern carrier. I'm looking to get a flight back to Australia, and the same price to use the website here, or whether I reroute my computer through Australia and pick the airfare, same price. No
Same
difference.
price. Oh, Kalas. Then, I mean, see, all of these are hoax. Don't believe in all of these things. Just go and buy your tickets from where you buy. It doesn't really matter, to be honest, now.
0586861003. If you've ever had an issue with this, you can let us know. But one of the things that is definitely going up across the UAE and the wider GCC, central banks are likely to hike interest rates again in the coming week. Borrowing cost is set to rise in the UAE and other Gulf countries in the coming week as the US Fed Reserve is expected to hike rates by 75 base points yet again. Since the UAE and the GCC countries are pegged to the US dollar, regional central banks follow the Fed to increase the rates and also vice versa. To get more details about this, Nitin Agarwal is the managing partner at Gopinath Group of Companies. He was a banker for 15 years in the UAE and he joins us on the line. Thank you very much for joining us this afternoon on Talk 100.3.
Hi, how are you?
We're doing very well, although we're trying to hold on to our pennies, given things might cost us a bit more money in the towards the end of the week. Is it as simple as because the US Fed Reserve increase interest rates that the UAE and the GCC countries have to as well?
Because we are pegged to the US dollar, as you rightly said in the introduction. So anything that the Fed does, we mirror the same. We also got the benefit when we reduced the interest rates, we got the reduction.
Right.
So when it went down, we benefited. When it goes up, we have to pay for it.
Which is fair. I mean, you can't just have it one way and enjoy the benefits of it and then not pay the price for it. But then tell me something. I've read this a lot, that every time that the Fed has gone up with the interest rates, it is said that it is not as inflationary as it sounds to be.
So let me rephrase. Basically, the reason the Fed is increasing the interest rates so aggressively is to control the inflation in the US.
Right.
I mean, one of the tools available to economists when there's high inflation is to increase the interest rates. So people deposit the money with the bank, reduce the purchasing power of the people.
Right.
So these are all measures by the banks to try and contain the inflation. Luckily for us, we don't have such a high inflation as the US or the world. But because, as you rightly said, we are pegged the dollar, so there will be win some and lose some.
So when it comes to certain countries, I know I've got friends in the United Kingdom and also friends in Australia, and they don't really want to travel because they're seeing this strengthening US dollar is reducing the value of their home currency when they look to travel at this stage, which is causing a slight problem. It's good for people here in the UAE if they're looking to travel because of that strengthening. But does this mean that if the US raise interest rates, you'll see other currencies might rebound and strengthen against the US dollar?
It doesn't really happen that way. US dollar is one of the strongest currencies in the world in the basket of currencies that people hold. And the euro and the sterling are falling down not just because of the strengthening of the dollar, but also of their own inherent weaknesses.
Okay.
So, the gas prices have made a havoc in the world.
Right.
In the UK, you have the Brexit pressure on the economy. So it's not just one factor which is affecting it.
Right.
There are multiple factors. So, just looking at it singularly from the fact that the US is raising the interest rates, the impact will be not the right way to look at it.
Right. So finally, if we look at it from a common man's perspective, how does someone who is a salaried person, someone who has EMIs, someone who has to pay for school fees and everything, how does his or her pocket get impacted with this?
So this will definitely impact everybody in terms of anyone who has a loan or a mortgage, because primarily people who have a floating rate,
Mm-hmm.
they will be affected more.
Okay.
Anyone who has a fixed rate, they
Mm-hmm.
will not, their EMI will not be reset as of tomorrow.
Okay.
Yeah, because till the time they have completed the existing contract,
Right.
which will have a tenor and an EMI, the interest is fixed.
Mm-hmm.
Unless within that there's a component of a variable factor.
Okay.
When we look at these interest rate hikes, do you foresee this is going to be the only one, or can you foresee there being more hikes to come in future?
If I understand this correctly, what happened is over the next 2 years, we will be having more hikes.
Okay.
So this is not the last or the only big hike. You will have more hikes because before Corona hit everybody and the interest rates were brought down drastically,
Right.
the rates were a little higher. I mean, I remember the time in 16 and 17, you were borrowing in mortgages at a rate of about 5.5%, 6%,
Mm-hmm.
where it had dropped to almost 2.5% and 1.99%.
Right.
So if you were to just go back to where you were before Corona, you are expected to have a few more increases happening by maybe another 100 to maybe 150 basis points. But it may be spread over 24 months or as the inflation and other worries of the world settle in.
Right. Right. So as someone who's been a banker for such a long time, what should one do? Should we hold on to dear cash close to our heart, or should we invest, or should we just try and make as much money as we can for the time that's coming?
See, I think that's a very difficult question to answer because when Corona came,
Right.
people think that it's a very short-term phenomenon. But already impacted us for almost 3 years already now.
Oh yeah.
Yeah.
And so, you really can't control what happens on factors which are beyond your control.
True.
If you had been an investor, the US markets have done pretty bad.
Right. Right.
There's been a decline in the Dow, etc. But if you look at the other emerging markets, say for example India,
Mm-hmm.
it's doing much better than other markets.
Right.
So, I mean, there are many factors at play here.
Hmm.
One, the interest rates were too low. Second, when the market was to open, unwinding was to happen, interest rates will go up. That's a normal course of action.
Right.
They've had the issue of the war between Russia and Ukraine impacting
Makes sense.
supply side of the equation. So, I mean, if you look at all the factors, if you have the money, you should be actually buying, you should have bought assets last year.
Okay.
Because everything went up.
Mm-hmm. Right.
But the problem of having money is when everything goes down, no one wants to buy.
True.
And when everything is going up, everybody wants to buy.
That's right.
That's it. The old line is Warren Buffett: be fearful when others are greedy, and be greedy when others are fearful. Try and find the opposite way to the trend. Look, we do appreciate your time in regards to giving us some more information on this. Nitin Agarwal, the Managing Director, Gopinath Group of Companies. Thank you very much for discussing the issue about interest rate hikes here on Talk 100.3.
Thank you so much. I appreciate it.
No, we appreciate your expertise. So just going back there, since the UAE and the GCC countries are pegged to the US dollar, with the Federal Reserve in the US are increasing their rates, the UAE has hiked the base rate applicable to the overnight deposit facility by 75 basis points in July after the Fed's rate hike. So it's good, I guess, if you've got cash money in the bank, that your rates can go up. But you heard there from Nitin, it's not going to be the last of the interest rate hikes. So prepare yourself accordingly.